Ladies and gentlemen of the crypto space, we're live on a Monday, August 12th at 12:21 p.m. It's a Monday. We're off to an interesting start of the week with a little bit of divergence in the other part of the market other than Bitcoin. They call it others, and I have that up here. So others are ticking up, which is sensical considering the 100 SMA on the monthly chart. Others is basically anything other than top 10 dominance. So others versus like Bitcoin is quite interesting to inspect relative altcoin outperformance compared to the most important collateral instrument in these crypto markets. So structurally, it's very interesting to inspect the broader equity markets compared to Bitcoin. Ethereum is similar to Bitcoin from a structural standpoint, and then others. And then we inspect the bond market to see what the hell is going on outside the system. So there's relative weakness, in my opinion, from a. What was I looking at earlier? I was looking at the monthly. Anyway, oh, it was the daily. Yeah, it was the daily that was catching my eye. So from a daily, it looks relatively weak. We're finding resistance on the 100 SMA, on S&P, as similar with NASDAQ punching right into the time-weighted average price from the downside. That is certainly a position of weakness. But then you zoom out, we have support on NASDAQ on the 50 SMA, and then you zoom out further to the monthly, and you see that all of this was barely a retest of the monthly 10. So this is a state of confusion, short term colliding with a little bit longer term, daily, weekly versus monthly, to get a sense of what the hell is going on. We could easily see a retrace and a retest right back into 10 SMA, the time weighted average price. Or if the system has deteriorated to such a degree, we see lower lows and you start to see continuation of bear market directionality, which is maybe another couple of months until our interveners of last resort finagle the system according to their quote unquote mandate. It's the grossest misconception of the Fed. The Fed is designed to mitigate significant downturns in the economy, significant spikes in interest rates, significant disruptions in foreign exchange markets, as well as volatility in the bond market as it continues to collude with the Treasury toward those ends. So, there's so much sentiment on social media and the Fed. Folks don't really understand that if they didn't do what they're doing, everything falls apart and everything goes to zero and all assets go to zero and currencies get monetized significantly. And that's not necessarily, I think, what everyone has in mind when they say that. There's a lot of steps in between to get us from where we are to where people say they want to be. Meanwhile, they simultaneously say they want asset price inflation. So the most important takeaway from social media commentary is absolute insanity. And no one has a very high level, 1,000-foot view of what the hell is going on. At least few do. And hopefully I present somewhat of a coherent view. Another interesting macro indicator is Chinese debt. 10-year instruments are rallying, or at least from the monthly candle standpoint, there's been a retrace, there's been some selling, but it's just a wick, and thus far this month, that is the lowest yield on record, which means the highest price point, which means their debt market is getting bid, which means relatively closed system, their equities and instruments inside the country are getting sold, and that capital is being funneled into government debt, and obviously that government debt is the raising of capital, and they're going to socialize that capital, and they're going to do interesting things. They need to encourage spending. So this is where you get into that distribute capital directly to people kind of conversation. And that is most likely what they're going to do. This is a risk off type of presentation, which is not common with emerging markets. This isn't loss in faith of the currency. This is a rotation of capital to this currency's backing, which is the debt of the country. That's how currencies are constructed in modern form. So this is not a common presentation like we've seen in Argentina prior to recent political changes, where the yields just keep going because it's the capital's expatriating. This has a closed border system. It's a very different environment. It's just fascinating to see bond yields this low while the U.S. is in a relatively uncertain position. I'm sure geopolitical collusion is reaching its maximum and things are getting interesting as central banks continue to talk to one another to manage relative FX valuations as well as the overwhelming debt burden that the entire world faces and how they're going to finance it. So macro is as uncertain as ever. Nothing has changed. Maybe we're closer to the talked about interest rate cuts by the Fed, but that just leads to U.S. Japanese spread narrowing, which will likely lead to further unwinding of the carry, which will eventually lead to U.S. interest rate spikes in the long end of the bond market, which, huh, interestingly enough, if you get your spike in the interest rates go up in the long end and you get a decrease in interest rates in the short end because they're cutting rates, isn't that a bullish steepener? Hmm, isn't that the case? A bullish steepener. Based on falling interest rates, right? Short end of the yield curve falls faster than the long end. Yes, yes, that's a bullish steepener, but I don't know. Bond market will tell us because we'll either see it monetize or rather demonetize equity markets to see if it's a risk off type of uninversion of the yield curve or not. But that's separate and apart from all the other things we discuss, like move indicator coming down, DXY potentially rolling over because of geopolitical efforts, and general appreciation of collateral, which triggers in a trifecta fashion the capital expansion of the global monetary supply. So there's so many moving parts, and I try and talk about all these moving parts to give a sense of the pressures in the system, but also the mechanics that preclude these markets that we're interested in doing weird things, because that is what we're here for, of course, the crypto bull market, quote unquote. And I think as we've seen historically, we continue to see a similar structure, and we're getting closer to that structure, and that's the destination. The path can certainly include a significant amount of volatility, as we saw last week, starting the Friday prior to last week with the headlines of the carry trade unwind, and that could certainly rear its head even more ferociously, and we get these seizures in the system, which drive significant amounts of volatility. But thus far, I don't have the VIX, but XVIX is up, so that implies VIX is coming down. But all this has a similar structure. Uh, you are below time-weighted average price on a volatility indicator. But the point is, similarly, look, it's an expression of resistance, which means SVIX comes down, VIX may spike again, which implies from like a weekly chart, you are below support. You get a rejection off the time-weighted average price on S&P or NASDAQ, and you get further downward price action. And then we get to see what the market is really made of as we entertain the 10 SMA and the time-weighted average price again on NASDAQ, as well as similarly on the S&P 500, which implies this is the path towards potential trend reversal. This is a relative high in trend reversal from that kind of standpoint. This is like sucking in capital prior to a further downward move in the potential start of an equities bear market. Let's shift over to crypto to give you some perspective there. I think, considering the lack of price action, there's a divergence in the expression of these crypto markets as compared to equities. This chart has barely moved. Now, folks may say this chart will move quick. Yes, obviously, you get gigantic candles. But the chart is structurally unchanged. We are above long-term moving averages. Equities markets have fallen below long-term moving averages and are below a little bit shorter-term moving averages on the daily and the weekly. So this is a fascinating divergence. It's not the same presentation as it was in 2019 and 2020. Look how high we are relative to previous all-time highs. Absolutely fascinating to see what Bitcoin's doing, 59,775, even Ethereum above the monthly time weighted average price. Quite extraordinary. Curve bouncing off bottom up to 30, 31 cents. Finally, some bullish action. You got folks on social media throwing around falling wedges. I'm like, all right, great. It's a falling wedge, but where does it go to the upside? And I don't even like looking at the short-term charts. They'll drive you nuts. We're barely pushing through the 10 SMA on the weekly. Monthly chart, we're not even close. 10 SMA on the monthly is up at 45 cents. Structure on this chart is meaningless, mostly. Who trades this? This is an investment class asset. So, narrative here, excuse me, obviously is the 2/3 inning coming up in 5 hours and 44 minutes, where inflation gets cut to 6.35%, which is a monumental reduction in inflation as compared to the Bitcoin halving. That is an entire third more than the Bitcoin halving, quarter. So halving compared to, well, it's the difference between a half and 2/3. Let's say a quarter. So that's a significant reduction in inflation as compared to what Bitcoin does every 4 years. And Curve is going to do that this year. Now, obviously, this year is a little bit unique because it's the vested interest, the admin, and the early, the developers, and everyone is cycling off their emissions, and what remains is the protocol and its voter escrow incentive system for LPers. And it's a fascinating shift. This is a milestone to say the least, and I think that accounts at least for the social media commentary to have picked up and has expressed or encouraged people to have more interest in something that is significant. It's such a hot topic. Folks get heated talking about, velodrome, aerodrome, kingdom versus curve. Better, worse, subjective terminology. You could arguably say there's quantitative assessment involved. What's pertinent is this is all new tech. And new tech doesn't necessarily invalidate old tech. And even more so, what's to say multiple good techs, not to say something is better or worse, because better or worse is so much of a subjective inspection. There's no reason simultaneous technology can coexist in a micro market that people really fail to recognize how insignificantly small these markets are in the landscape, the tapestry of global finance. It is very imperative to understand that the size of these crypto markets is zero in global finance, even Bitcoin in most regards. Billions of dollars, less than 100 billion, no, 140 something billion dollars across all crypto L2s and Ethereum mainnet, but less than 100 billion on mainnet. That's really zero. And the vast majority of Bitcoin is not on mainnet. So The collateral is just Bitcoin. So that capitalization of Bitcoin doesn't really contribute to these financial markets significantly. So there's less than $1 trillion, couple $100 billion between currency and collateral in these financial markets. There is no way to assess where the hell we are relative to the larger financial ecosystem other than stating we're at basically zero capitalization. That's a very important inspection, and I appreciate the sentiment of developers, how defensive people get. I get defensive with my own software. But from a third party perspective, my perspective, even an investor's perspective, why would I not have exposure to all three of those businesses? Velodrome, Aerodrome, Kingdom Exchanges, Curve, and Balancer, who's working with CowSwap at this point for AMM functionality. There is no certainty. The only certainty is uncertainty. So all that matters from an investor standpoint is exposure or no exposure. And that's the only possible way to sustainably and rationally navigate these markets. And exposure, as always, you must be cognizant of size. You cannot have good size that does not warrant the exposure. Anyway, I hope that helps as a brief introduction. Anything else to look at? I've been updating my documentation. These are wild numbers from Truflation. This is very convenient data. 25% compound consumer price inflation. Everyone always conveniently leaves out the prefix, the qualifier of what kind of inflation is, because literally everyone's screaming for bull market, but bull market translates to crypto inflation. So it's very important to understand the word inflation. There's such a grossly not understood terminology. Nothing else too interesting in there. Tapioca hovering 232. Interesting numbers. Anything interesting on social media? Hey, look, Arrow. That's convenient. Arrow. Talking about Arrow. Oh, that's convenient. Anywho, we're not going to go through social media. In fact, I'll turn it off. Let's go back to Bitcoin and let's go through the commentary. If you're on X or you're on YouTube, please feel welcome to post some comments and let's chit chat. What's on your mind? Let's do this. Arrow, good afternoon. Much pleasure, my friend. Sir Joe, good morning and present. If you're fulfilling your revenue needs and feel like you have sufficient crypto exposure, do you feel like you need collateral at that point? I think it's important to have collateral. Why? I don't feel like I want it, but I think I need it because that is inherent in the structure of economics, the concept of collateral and currency units. So until I have a better grasp of management of my business, which is basically my family, I think collateral is pertinent because obviously we have investments. The investments aren't necessarily collateralizable. In traditional finance, you can get access to credit based on the existence of a business and the existence of cash flow. You can't do that in crypto markets. The access to credit is collateral based. So I think I'm still leaning towards the need for having collateral to access credit, and that's in the context of me hating credit. I hate credit. I hate owing money. I own no money in crypto. I own little to nothing outside of crypto, and that's how I sleep at night. It's the most important thing we all need to do better at is owing less and hopefully no money, because then you sleep optimally at night. And there's infinite ways to achieve that, sacrifices that we make that are harder than most people realize they're likely able to achieve. Sleep well, and you'll be able to invest better. Anyway, good observation, good thoughts. We will elaborate and we'll talk about that topic as the years go on. I think that's a good statement. You can't get credit on your cash flow in crypto markets, but you can get credit on collateral. So that means that there's something there to business structure. Good topic. We'll go more on it. DA advisor, good morning in the house. How are you, my friend? Diego, do you prefer fixed bar rate like Aave or variable? So curve isn't just variable. Curve is for leverage, and that's significant, especially in crypto markets, because the crypto markets love their leverage. And I think the more in-demand product is Curve. I think Curve USD is a much more desirable structure because what spikes to 20, on average, the interest rates are like 6, 7%. And they spike up, people repay, they drop down to zero, then they spike up and they go down, and that's the whole point of a dynamic monetary policy. So I personally, when I borrow, would prefer fixed because I'm not a large borrower. In fact, I'm optimized for an Aave borrow of like 5 grand, and that's to cover some, I don't know. I don't know. That brings us back to Arrow's comment about collateral. If I have enough cash flow, and what is the significance of it? These are philosophical questions in many regards. How much collateral do you have? If you have a I certainly am asking myself this now, and I will continue to ask myself this into the future. Do you prefer? Nope. Yeah. Good morning. Yams in the house. Much a pleasure. Can Fed lower rates now with JPY increasing rates? No, they cannot. Would it make the unwind of yen carry trade even more worse? Yes. The carry trade is based on a spread between U.S. rates and Japanese rates. Uh, yen, uh, well, Japan increasing interest rates over there is narrowing the spread. If the U.S. Cuts rates, carry trade unwinds, it's forced to unwind further. Uh, there goes there goes the U.S. equity markets. Bye-bye. And this is historically why they're cutting rates and everything's fucking collapsing. So we get to see what they do this time because we haven't had a rate hike cycle like this in, you know, before 2008, leading up to 2008. So we get to see how they're going to manage it. And that's the whole point. That's their job, to manage these interest rate spreads and collateral valuations and currency volatility and currency spreads. Obviously, Congress and government manages currency strength in many regards with regard to import, export, and fiscal deficits, as that the deficits are applied to imports, and that all affects the expatriation of capital, our largest export, and that plays directly into the valuation of the dollar, as well as denomination of foreign debt, which is almost predominantly dollars. So that's why these systems need to be managed. And frankly, structurally, as we inspect from a DXY standpoint, it loves to go up. This thing loves to go up. USD JPY was touching 108 this morning, I believe. Yeah. But this thing structurally needs to go down. In fact, in some of my business documentation, I have screenshots of the yearly, and I highlight the risks of Federal Reserve activity with regard to dollar liabilities. It's a risk. So we're all exposed to the risk of a liability. A liability is inherently a risk, and all dollars are liabilities, even a paper dollar, because a paper dollar is called a Federal Reserve note, which is a liability of the Federal Reserve, backed by the full faith and credit of the Treasury. Treasury Secretary signs Federal Reserve liability notes. A liability is a financial risk. So that brings up very interesting business structure questions, which would be a digression, but suffice it to say, if the dollar is forced to be devalued for purposes, geopolitical purposes, clearly we're going to have a very different environment or a risk management environment to consider. The dollar's been up since 2008. It's been a bull market in the dollar for the last 16 years. And now all of a sudden we have a different environment to consider. So that's a very interesting business structure argument that such a change in landscape means we got to manage that. We got to manage that risk of dollar appreciation or excess dollar appreciation versus flipping to dollar depreciation. Fascinating, fascinating considerations and arguments that could be presented only on paper. You could speak it oh so much when you codify things in document form, presents things very differently. Hope that helps. Lord of the Pine Cones, good morning, Cap. Much a pleasure. Yeah, also in a recent stream you mentioned that you expected a 50x increase in curve cash flow. I'm not sure how it fits with your conservative expectations. No, not a 50x increase in cash flow, but cash flow is proportional to business activity. So to get a sense of where things will probably go reasonably, we go over to Dilemma. And you can do correlation between like total stablecoins and on mainnet versus volume. And then you could probably do a multiple, but it's probably an exponential in there because if you have 10 times the amount of stablecoins, you're probably going to have 50 times the amount of volume. So there we go. There's your 50 number. But the point is we have on mainnet a total of $80 billion in stablecoins. Producing whatever curve is currently producing in volume. What happens when there's $800 billion? What kind of volume is there going to be? A 10x in stablecoins wouldn't necessarily be just a 10x in volume. So what is the multiplying factor? How much more activity will there be? This is obviously dependent on bullish or bearish conditions. But that's a fascinating mental exercise. Specifically, the range that you should have in mind for what is a reasonable expectation versus what is a wild expectation. And gut instinct says things get weird because that's what the crypto market loves to do. So maybe 50x and everything collapses in the bottom of the bear market, you're at a 5 to 10x multiple on cash flow from like this week, let's say. And to me, that is what I'm thinking, more so the higher lows. I don't expect the bear market to be a contraction relative to today, which is an expression on like the Bitcoin chart, logarithmic. You get higher lows, higher low. This is on the yearly chart, by the way. Cute chart. Drive you nuts. Higher low, higher low, higher low. So maybe you get the big crash next time in Bitcoin down to like 25 grand. Be a hell of a chart. I don't think that's reasonable, depending on how bad it is. Last Bitcoin bear went down to 16 and change on the yearly chart at the close. So next Bitcoin bear 45. I don't see why it would go lower is my point. So probably a little bit into the previous close, or previous open rather, and certainly or more confidently above this particular January 2023's open, and that structurally would be consistent. You would need like structural invalidation to start printing lower lows from a yearly standpoint on an asset this new, and that would be the lower low. And that would be presenting us with a very different conversation about very much existential things. Honest curve pump today, yeah, up to 30 cents. Long way to go. Weekly chart maybe. Not too constructive. Above the 10 SMA on the weekly. There's a long way to go. But this is the discounts. Folks were buying this at $5. I myself ended up doing things at the 3 and change and got in relatively higher, probably in the high ones, was a buck 80, and now it's bottomed at 19, 20 cents. I increased my position 45% at the 20 cents. Did I buy bottom? I got no freaking clue. But it made sense to me at the time. And 20 cents from where it was, very interesting price action considering the things we've gone through over the last couple of years. This is going to be a hell of a story to tell in 4, 8, 12 years from now about the things we experienced and the resiliencies of the business and frankly the functionality of the business considering the products and services it offers to the users of these financial markets. Very interesting to say the least. Yes, indeed, that is a tiny, tiny, lovely little candle, which is 50% off bottom. So it's up 23% on the daily, but that's up 50% from bottom thus far, which is very nice to see. I think this question was already asked, but can't recall the answer. Thoughts on renting a house versus buying it? That could be a quantitative assessment, and I recall charts that indicate in the U.S. it's more economically reasonable to rent currently. Albeit, as I talk to younger siblings, 18 to 25, I'm like, why the hell are you going to rent or buy? And when you got, like, I'm not even going to show you. But I was looking at motorhomes, which is a portable house, and they're brand spanking new. And they have kitchens and showers and brand new bedroom. Literally, really cool little motorhomes. And they're like 80 grand. So 80 grand, you're talking about significantly less than a rental of a property in many instances. So instead of renting for $3,500 a month, you get a 60 to 80 grand motorhome, and it's brand spanking new, and it's $1,000 a month, $800 a month. You get a 2-year-old used one for $800, $600 a month, plus insurance, $400 a month. I don't know. So the point is, I'm a very outside the box thinker when I talk to friends and family, and I'm like, why are you living there? Why are you doing this? I understand you want to, but do you need to? And can you do something strange or what other people would perceive as strange to get ahead further? And frankly, the biggest advice I have is don't move out and stay with your parents and act collectively. Anywho, very complicated conversation. Um, Housing. And clearly there's a whole lot of unuseful social media commentary about housing is unaffordable. Yeah, obviously, if you're have a $4,000 a month monthly income and your mortgage is $2,400, your house is too big, and you should be living in the motorhome for $600 to $800 a month, or you should be living with parents, aunts, uncles, cousins, which is very much an Indian custom to have a very large extended family and sharing resources and pooling resources. So it's a very complicated and sensitive and heated, emotionally charged concept of property and and yes, I think it is a reasonable statement to say we are in a much worse situation as compared to parents and older generations. Clearly, but to me, I'm a forward-looking kind of person. I'm like, all right, yes, but what are you going to do about it? So the appropriate thing always is to have an effective wake-up money situation. You need to be psychologically healthy in order to be able to engage with markets and take care of financial responsibilities, and also be present and accountable to your friends and family, especially your children. So you need to make sure your wake-up money's in check. Wake-up money is the amount of money you need to wake up in the morning. So you better make sure you are not spending too much. That means some weird choices considering the circumstances that are currently present in society. Like, we talk often about crypto being a hot space for capital for purposes of geopolitical arbitrage. Well, it just so happens that is exactly what people should be doing from a housing standpoint. Most people have a car, and if they're in a very high price rental situation, $3,500, $4,000 in California, or high prices in New York, um, you get in a car and you leave and you go to a state that has a more affordable situation. And have you ever gone on vacation? This is a great question. Have you ever gone on vacation and stayed at a relatively inexpensive motel for a couple of nights or a week? Um, so that is an amount of capital you need to stay there for, let's say, 2 weeks to a month. So why do I say 2 weeks to a month? Because that's probably an amount of time to get some sort of income locally in another state. Uh, so you save up an X amount of capital, pay your last month rent, and go bye-bye. And sometimes you just got to do it and just, you know, execute. You leave. You stay at a motel, hotel, get set up. You have your computers, you have your equipment, and you make sure you have a plan, a strategy, a process to follow, and you execute. Frankly, I like the motorhome idea because then it's yours, and then you have choice. You're not restricted to a fixed place of living. It's an interesting way to live. Wife loves to travel. I like the idea of a motorhome and a long adventure. Um, traveling the nation. People are so hesitant to think outside the box. And I'm literally just thinking about it from a vacation standpoint. It's nice to have a place to come back to, but the idea of moving around doesn't seem so unappealing to me, especially from an opportunity standpoint, at least an education standpoint, from like uh, um, a vacation thing. You want to see the world, understand the world. So, so I wouldn't find that unappealing from thinking from a younger cousin's perspective of some shit that you have to do under difficult circumstances to make it work. And the most important thing to make it work is not fuck yourself over by spending more than you make, which is why I hate fucking debt. I can't stand it. I'm relatively stable and well off, and I don't do the debt thing. And that just, some people just, like, I know I have friends and family that have so much shit, and it's all voluntary, it's all discretionary, all these ridiculous cars. Not to say my car isn't ridiculous, but I don't have the debt associated with it. Anyway, that's a big digression, but very heated topic, so don't shoot me over some of these things. I don't mind talking about it, but just remember I'm rational, which means I don't subscribe to social media commentary about a lot of things, and I surely will think in terms of outside the damn box about the most important thing, which is how to get shit done. How do you get from point A to point B? How do you make it work in the what may be the craziest way possible, involving a shitload of sacrifice of normalcy? There is no reason to not sacrifice normalcy. The white picket fence. All right, great. You can't have it? Okay, I'm going to make something else work. And I'm going to make it work as well as I can. Because that's the only measure that a person can have on themselves, is how well they're making what they can potentially do work. Because all you have is what your potential is. And then you want to adjust your potential by doing different things, thinking outside the box. Anywho, Brian, much a pleasure. Happy Monday. Where were we? Any thoughts on WBTC news over the weekend? If it's Curve, got to follow suit. Well, Curve isn't maker. Depends on the Dow. Anyone could propose a governance vote, but why would they? Why? Why? It's a product, and that's okay if there's an issue with collateral. The product is organic, so I'm not. I don't see why. It's good to put in a governance proposal that there's risk, but what does that mean from, you know, capitalism? You want to use collateral, use collateral. You want to blow up your collateral, blow up your collateral. That's just a test of the resiliency of protocols, is how well that collateral is managed from a volatility standpoint and how liquidations occur. So, no, it's irrelevant, in my opinion, to a well-structured protocol that is uh, immutably dynamic. It's the appropriate statement. Arrow, if we are of the belief that curve is undervalued correctly, what price range is real coin value? Well, deposits, a TVL to market cap is always an interesting metric. Bear in mind, as I've experienced, and you all have experienced, you get anomalies, and it could take a long time for things to stabilize and express real. There's no such thing as real or fake or valuation. All there is the current market price. That's the most important thing people, I find insane. Like this whole valuations thing in traditional finance with price to earnings and forward looking, forward guidance, and you know what are the P&Es on equities? They're freaking weird. So I'm like, no, what justifies a P&E? Someone's going to buy some shit, and more people are buying than people are selling. That's what justifies a damn P&A. So this whole valuations thing is insane to me, which is why I've developed my framework to think about things differently. And what I give a shit about is if it's going to continue to exist, that's probably important to assess. And if there are more users in the future, which is probably what like Raul talks about, is like the secular adoption. Because what does that imply? That implies higher lows, arrow. So that's all I give a shit about. Will it continue to exist into the future? And to me, I look towards immutability in that regard, which is nice from an arrow velo standpoint, and obviously curve, um, and higher lows, which is there a demand for the product? I mean, clearly there's a demand for credit products and foreign exchange. So, what do I want to own most of? Uh, Immutable, deterministic credit and foreign exchange products. To me, that's the best investment I could possibly think of. And that is not something you can do in the equities market. Only exists in these crypto markets. So, real, mm, that's something, it's a conversation, a subjective conversation. What is real? What's pertinent is what if there's $800 billion on Ethereum mainnet? What if there's over $2 trillion across crypto markets? What do these protocols do then from a product and service standpoint? That's what I think about. Hope that helps. What are the pine cones? Do you think Bitcoin can break away from its sentiment correlation to the U.S. markets if a U.S. recession occurs while the rest of the world has its heyday with a weaker dollar? Unknown. I wouldn't think about it much. I come back to fundamentals that I think about, like you want to own more assets and you want to own them at the cheapest price possible. So, which means you need cash flow, which means you need to work, and that means you need businesses and a productive balance sheet to have cash flow, such that you can make choices to make purchases of assets if cheaper prices are afforded. Um, I don't know about the sentiment. No, because I think the general public is broadly redacted, and it's all sheep mentality and herd mentality, and no, I broadly don't think that the sentiment will decorrelate. I think the shallowness is getting worse and worse. It's like Carl Sagan, the demon haunted world, and it's where we've gone as a culture and a society is to the de-education, de-critical thinking, the de-brainization. It's just mental mush out there. So it's the minority that are voluntarily choosing that capacity, but the vast majority are voluntarily just abandoning that capacity. Anywho, that's very unfortunate. Carl Sagan's tweet is ever relevant today, more so now than ever, maybe. Now that correlation will not break. Jake, hey Noah, glad I caught your stream. Gotta ask, what do you think about TAP at 50 cents to a dollar? Would you increase exposure? You done for good? I'm done. I got more than enough exposure. I got a lot of that stuff. And I I was one of the first investors in Tapioca. I was a seed investor like the first week or two. They were even talking about building. My seed round was at 22 cents. I have absolutely no need to purchase any more. I will never ever sell it. The second I can lock, I lock. Why? Because my business structure gives me so much incentive to do so that it's a no-brainer to do so. And I am only interested in higher lows. I do not care where tops are. I do not care where exuberance leads us. I do not care how bullish some shit is. What I care about is what's on the screen, and I look forward to seeing this space continue to significantly monetize in the coming decades. Let's check back in 2032. And all I care about is owning the infrastructure that makes the global financial system operate and the infrastructure that will make these financial markets an incredibly interesting and lucrative destination for capital in search of interest rate, geopolitical, and geographic arbitrage. Ain't that some shit? So, no, I'm not buying anything. My expectation primarily at this point, as me and Arrow have been talking about recently, is what to do on the way up. And I've been going back and forth between collateral accumulation, like just buying more Bitcoin. And I'm like, I probably have enough Bitcoin. It's just that's for the kids in 20 years if that does what it does. That's just Immortan Joe insurance. All that matters is your capacity to pay your bills, which is done nominally. So that's the whole thing about inflation. Ooh, inflation protection in the Bitcoin. Okay, great. You know what's inflation protection? Business. You know what happens when there's consumer price inflation or currency inflation or whatever inflation? Inflation is relative. These damn cash flow through these businesses is going to inflate along with the inflation. You're going to get inflated cash flows. So manage your liquid reserves, the cash, the dollar component of your cash position. And I'm inclined to say, maybe more so now than ever, that it's just take the stables every week and just accumulate cash, 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 cash. Why? Because that's what no one else does in these crypto markets. They're all like, oh, to the moon, oh, XRP to $1,050 million because all the banks are. No, I don't have time for this shit. So I'm just going to sell for dollars all the way up and stack the biggest pile of cash and just watch everyone go absolutely insane over asset prices. And, oh, it's going to go 1,000x on the money and who's got the bigger dick? And I'm like, I don't give a fuck, man. I don't care. I'm so over that whole relatively juvenile mentality of capital management. And I'm like, where's the grown-ups? That's why I tell my story. Someone's got to tell a different story about capital management. We got the boys, got the macro boys that talk macro arguably better than I do because I'm just a digester and processor of larger macro theses. But someone's got to be in crypto managing capital and talking about it not like everyone else. So that's why I do what I do. I'm the guy that does the shit like, whoa, look what he's doing. He's doing something no one else is doing. So I'm just going to sell for cash on the way up and expect everything to collapse because that's what it always does. Anywho, Hope that helps. Bit of a digression. You know how those digressions go. Our so High Captain is the VE curve locking still on Ethereum. Only Ethereum mainnet. My friend, no other chains. You're very welcome for the rationality. Gotta keep things rational around here, boys and girls. What do you make of the recent WBTC developments? Zero. 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 I make nothing. And TBTC school, EBTC is cool, FRX BTC is gonna be cool. Coinbase will probably have an on-chain Bitcoin. When BlackRock Bitcoin? Come on. So I'm just not thinking about it too much. I think WBTC is fine. Famous last words, right? Hey Cap. Hey Adam. Given the seizures and Black Swan threat, does it make sense to go full Buffett and just stack dollars rather than FBTC on the way up and wait for further seizures before converting cash component to FBTC? Yes. Yes. So I'm currently leading towards the dollars on the way up. And that's fine with me if I'm missing out on Bitcoin going up. Oh, dollar denominated. Oh, appreciation. Yeah, capital gains is a pain in the ass. I manage income much better than capital gains nowadays. So nicely put, Adam. Arrow, lol, social media. My name predates Aerodrome. I swear. Yes, I can confirm. Jeanette, good morning, Cap. Much pleasure. Raul, hello. IW, good morning, all. What are the pine cones? You mentioned the move indicator as a forward-looking indicator to estimate the top, plus U.S. dollar chart and Fed sheet would give 3-month forecast. Could you recap how on your planned implementation? Well, my planned implementation has nothing to do with me being able to see top. I don't care about top, as I was just discussing. I'm probably just going to have my income and do what people do with income, except I expect that income to increase. So the whole point is when you have more income, you have prosperity. When you have less income, you have austerity. So I'm looking at this crypto space completely not like the way social media presents it. Oh, the number gonna go up. The meme coin's gonna go into a frenzy, and the captain doesn't give a shit. Albeit I do, because your meme coins will produce significant transaction fees, and that's thank you. So that's all I want. All I want is 10x on revenue. I don't care if the principal stays the same. But it won't, because if you have a 10x on revenue, the principal is going to appreciate. It's just the way it works. So I just want 10x on revenue. I'm okay not being a bajillionaire. I think that's probably the weirdest thing people might say, or like, what? I don't give a shit about having $100 million. I don't give a crap if I didn't have 50 or even 10. What I care about is at the end of the week, can I pay my bills from the backyard by clicking a button? That's what I care about. That's freedom. Everyone out there trying to get rich, I don't know. That is insane. Gives a shit about being rich. I want to be free. Anyhow, seems like a sensitive subject. Um, anyway, Lord of the Pine Cones, top. So move indicator. Move hasn't even rolled over yet. We're not even close to anything. Move on the 6-month chart. You got to break below the time weighted average price. Look where the blow up was, July of 20. Got to look at the monthly. Look where bottom is. Bottom on move. Well, here's your blow up in 20. So look, September of 20. This is here. September, January of 20 it blew up, and then March of 2020. That's when equity markets and crypto nuked. So here you go, January of 20 was the bottom. It's fascinating that it's September of 20 because, that's about right. It's about Q4 2020 because Q4 2020 slowed down and then January of 21 got hot. But I guess maybe the bottom and end of December, start of January, I guess was maybe part of January, if my recollection is not perfect. So this chart is generally inversely correlated to asset price inflation because as this comes down, this increases the systemic capacity to print dollar liabilities and expand the currency supply. So when you see this come down and you see the DXY start to bottom, I'm sorry, when you see move bottom, DXY bottom, and collateral prices start to depreciate and yields go up, that's the trifecta of bearish confluence. So right now we're heading into the potentiality for the trifecta of bullish confluence, which is move rolling over, DXY rolling over, and long end 10 to 30 year treasury appreciation, which is yields down, which is exactly what we are seeing marginally day after day at this point. Hope that helps. Gaming Larry, this is a super random question. What are your thoughts on AI? Scientists have been saying that we have AGI in the next 5 to 10 years, which will take all our jobs. All our jobs is a very broad statement. The question becomes, what are the jobs that will be relevant? And the odds are every human being on this planet should be thinking about what are the jobs that will be relevant. And I'm sure government agencies and world financial planners are thinking about what are we to do with people that become irrelevant and either don't want to or don't have an intellectual capacity to find alternative employment. So most worrisome is this reality is coming probably sooner than the 5 to 10 year span. This could easily be in a couple of years. And it changes the whole equation when every single call center, the millions upon millions of call center jobs around the world evaporate in the blink of an eye. And every fast food restaurant could buy a $15,000 robot to replace a $65,000, $70,000 a year human being. So the whole equation changes. So we're talking about a structural, a systemic restructuring of the entire concept that we define as a job and society for that matter. What is employment? How do you manage natural resources? How do you ration natural resources? Because that's the point of currency. That is what a currency is for, to ration your capacity to go to the supermarket. And how do you finance social order? So on and so forth. So these are very complicated questions that are going to be quite interesting to see how the system navigates in the coming years. And I say years, I say less than 10, because I frankly think it's getting weird already. Are you able to comment on why Curve doesn't really pull for the effort to get more of a footprint on base? Arrow is dominating over there because it's irrelevant. Arrow is dominating over there. What's pertinent, the biggest market, in my opinion, is mainnet. Frankly, that's just dollar denominated, the biggest market. I think the L2s are interesting, but I think a premium is wanted. I think there's greater comfort with the premium. There's a reason people pay $1,000 for a Prada T-shirt, and it's a big business because it's expensive. So if you can pay a premium to operate on mainnet, there is a sentiment that comes along with it. And when you're throwing around $100 million clips, you probably want to pay $100 instead of 5 cents because you feel more secure. And the argument is that you are technologically more secure until the L2s really get their zero knowledge proofs in order. and more tech stack in order, and then more lendiness. So check back in 4, 8, 12 years to see when the big money moves off mainnet. And 4, 8, 12 years, every protocol is going to move everywhere. And as I've clearly said, at some point you're not going to know what chain you're operating on. So it's fine. I the, the geopolitical interest rate arbitrage. If there's an incentive, it will be done. So bear in mind, there might not be an incentive currently. Look, curves on a lot of chains other than mainnet. And on other chains, there's different interests and different financial activity. And the V33s are very popular. Note that there's no V33 on mainnet that's relatively competitive with Curve. It's kind of pertinent. So it's strange, and we're going to really need a hindsight perspective. In 4 years' time, we'll have to really inspect what the hell's going on. Because you're talking about a big delta here. Uniswap 700 mil Curve at 100 mil. I don't know what the hell Dodo is. And then you're down at solidly at 13. So you don't have any Velodrome products. You don't have any Kingdom products. You do have solidly, which is interesting. We'll see what happens with Phantom over the next 4 years, as well as its mainnet deploy. We'll see what it does. I mean, it's volume to TVL is through the roof. Hashwell interesting at 30.3, because Hashwell is definitely not a nothing. Hashwell is interesting. I still don't know where the hell Dodo is. The fuck is Dodo? Anywho. Tapsy, sup, volatility, enjoy yours. Much a pleasure. Connected dots, good morning, Adam. Ben, the situational awareness document by the ex-OpenAI employee is wild. Everything gets weird over the next 10 years. Yeah, I very much see that being the case. Gene, good morning. Good morning. Speaking of juicy prices, what are you thinking about FXN at 66? 75% of supply is locked, and there's very minimal dilution. I'm a big fan of Aladdin DAO products. Broadly speaking, they are a derivative of Curve Federation. So I have exposure to Concentrator. It's not the most incredibly lucrative from a yield standpoint, but at some point I think Aladdin will be relatively successful as these markets evolve over the coming years, and they will have enough incentive and financial capacity to do what they've said they're going to do, is to refactor tokenomics and do interesting things. So my exposure was chosen vis-a-vis Concentrator. I think F of N is very interesting and a meaningful product, and they're stable coins and they're iterating, and that's all great. How much does it pay in interest? A lot. Go figure. There's a lot of very interesting interest opportunities out there. Just remember to structure your portfolio in a way that's sustainable and has longevity, and size your positions accordingly, and own things. So if you're going to own something that's no takesy backsies, no refunds, you got to have a good conviction. And if it doesn't work out, own it, which means be prepared for things to not work out. And then it's okay to own things. Hope that helps. Or maybe even ALD at 3 mil market cap, fully devoted value, looking very juicy, 30% of revenue from all products. The ALD stakers. Soon. Yeah, well aware. I look forward to it. You know why I love Aladdin? Because it is highly popular. It has great branding, great marketing capacity, and the products are in great demand. You know what that does? That strengthens the Curve Federation. I'm a base layer maximalist. I am boring AF. I just want to own the infrastructure. People want to own, I just want to own the roads. I just want to own the power lines. That's all I want. Just my little piece. My little piece. That's all I want. John Stapp's Arrow fees are drastically larger than Velo's. Do you know if DeFi Llama is counting Velo's exterior OP chain revenue? Probably not. Or is Base really that much more of a beast? Probably yes. Probably both. So I'm not going to get into Aero and Velo. I chose Velo because I couldn't get the discount I wanted on Aerodrome, and that's okay. Guess what Aerodrome's cranking out? What, 30, 40%? Guess what Velodrome's cranking out? 30, 40%. Guess what all of them are cranking out? They're all, percent is percent is percent. That's it. Because when all this space monetizes, it's all going to monetize. So thinking about one versus another is going to drive yourself nuts. So basically, the data is important. So there's probably a little data delta there. I don't know the significance of it. It's a good presentation over on Optimism as long as Velodrome's above Uniswap. At times, 300 mil in the week compared to 200 mil. That's crazy. And obviously on Arbitrum base, Airdrome has significantly more volume. Arbitrum, this is the same set of protocols at the top for quite some time. But that's it. Anywho, Velodrome, good old Velodrome. Cold-blooded Schiller on X mentioned curves, 3D bullish divergence, a little TA for you. Yeah, I'm not looking at RSI, Stoke, whatever, MACD. I just don't have any patience for that shit anymore. I just really don't. You know what I know? I was looking at curve at 26 cents and now it's up at 31. Yay! That's cool. Check back when it finally breaks some long-term TA trend structure. So, bullish divergence at such a low time frame. You know what kind of illiquid situation is going on with curve? It's all locked up. 45% is locked up. That's wild for curve. The amount that was bought. How far down the depreciation rabbit hole this has been coming. Watch what I want to see. When my ears perk up. My ears perk up when you breach in the time weighted average price on the monthly of 50 cents. Now I'm like, oh, a higher low, or at least a higher high, and then you got to retest the time weighted average price. But oh my, that's when I perk up because we've only touched the time weighted average price one time in the last since 22 in the last 2+ years. Only touched it once. I just want to touch little touch, little touch of the time weighted average price. Get your little tippy touch, one peepee touch, as the Zohan says. Do peepee touch. Come on, hit the time weighted average price, baby. At some point. That was kind of weird of me, huh? I cracked myself up. Funnily enough, 2021 brought a camper. I bought a camper van with the primary motivation of being to save cheaper cost of living, fun and good learning experience, but I missed the space and niceties. Miss. These very important keywords. Miss. Yes. And that's okay. And if the numbers work, you can have the space and nicety. But if the numbers don't work, you don't have the space and niceties. But you do what you must in order to succeed for yourself and your family, which means wake up money, because that's the only way to be psychologically sound for yourself and your family. You need to be good in the head in order to manage capital optimally. Though the idea of going full minimalist still appeals. Oh, yeah. Oh, that's a hell of a lifestyle. I find it fascinating. I don't know if my wife and daughters could digest that reality, but like I sometimes think a lot about a farm in Wyoming. Now, obviously, after you've done what you've done in the capitalist cities and all this shit that we've done over the years, it's not a farm, it's a nice house in Wyoming. But you're done, you're off grid. And then you hire a farmhand. You don't even have to manage your damn livestock, but you're off grid. You get your milk. You can make some cheese, and you brew some beers, and Grow your carrots and your vegetables, and you got a whole shitload of chickens that keep on fucking and making more chickens. Everyone's like, the chicken's expensive at the grocery store. You know the chickens make themselves? That's a very interesting thing. I don't think a lot of people were taught that in school, that if you have a bunch of chickens, they make more chickens. So I really like the idea of a minimalist lifestyle, and I find that because it's so far detached from the reality of city living. I find that something that would be quite appealing because I have such a distaste for what the city is. It's something that draws me to the minimalist lifestyle. Anywho, I would love a rainwater capture system, and you have your own distillery, so you have distilled water. I would love that shit. That'd be so cool. Oh my god, I'm just daydreaming about shit that I would love to do in my life. So good thoughts, Adam. Thoughts on the current American presidential election? What do you think will win, and do you think objectively take U.S. on the right path? This is a great question, and I am obligated to maintain psychological stability to not think about it. I I have the belief that we live in a controlled system where our choices are an illusion. So I think it's next to irrelevant whom is president. I think our vote means little to nothing. I think we have no representation. Maybe, maybe I'm old school, but I think the Boston Tea Party was kind of cool. No taxation without representation. Meanwhile, these fuckers are taking 40% of my paycheck. So part of the language, ladies and gentlemen, I know maybe some of you folks listen around kids, but I get a little emotional at times because that's kind of messed up. What the general public has allowed the government to do to them, and they've allowed it because most people are redacted, and it's okay. It's okay to be redacted. Life has no expectation of any of us. There was a time when I was a young pothead dreamer in college and had nothing to do the next day. I had no ambition to wake up on a Saturday and work hard. It is okay to do whatever you want to do. But it's also important to know that most people cannot even advocate for themselves and what they want and what they need. It's all yelling and argument, no articulation, no structure, no creativity. That's the majority. It's the demon haunted world, as Carl Sagan says. If y'all need to read it, read this. So here's a quote. I'll put the quote for you, and this is, did it get the whole thing? But especially, where did it get it? But especially, superstition. No, I don't want that. I want I want to be able to copy this. Add superstition, but especially. Oh, it just literally missed the last couple of words here. Carl Sagan, brilliant. 1980. When was this? 84? I don't know. This is a brilliant quote, and that's where we are. And listen, I don't give a shit who's president. All that shit is crazy. All this, oh, he's better than, yeah. I was literally watching The Real Housewives with my wife last night, and I'm literally actively trying to turn my brain off. Uh, it just means nothing. It just means nothing. So it's just that's the way it is. It is what it is. Um, Last couple questions. I'm going to wrap this up. Hey, Cap, how do you think Federation nature on Curve compares with presumably better models like V33? They will all exist into the future. Hi, no, I've been enjoying your streams. You're an interesting thinker. Random, but any advice on choosing a life partner? Boy, girl, girl, boy. That listen, I'm liberal in that regard. Just make here's the kicker: smart or not smart, productive, rational, reasonable. Those are the assessments that you want in a life partner. Want someone that's smart. Everything else is cool. I am the most fiscally conservative person I could think of. I am extremely liberal in many other things. Look, a conservative liberal, do whatever you want. Just be conservative about it. Be reasonable. And don't try and change other people's minds. Do your shit yourself. For yourself and your family. Make a family. This whole shit of other people trying to influence other people, that's insane. Do you. Don't try and do you on someone else. No one else gives a shit what you're going to do. Everyone can do whatever they want to do. Just leave everyone alone. Fuck off. Don't tread on me. That's great. Don't tread on me. Don't tread on me. This flag is the snake flag. It's the Gadsden flag. It's old school. Those boys back then knew a lot. And I'm very curious. I've been meaning to read specifically the Federalist Papers. I gotta read this bad boy. Federalist Papers. Hamilton. Anyhow, so big. My thoughts are predominantly on intelligence, rationale, decision-making capacity, productivity, reliability, dependability, consistency, honesty, bravery. I wouldn't mind my wife's a freaking warrior. Frankly, if all shit broke loose and I gave my wife a sword, oh, she's going to battle. She might not be good at it at first, but the point is she's a warrior. That's the way she's most productive. One of the most productive persons uh, I know. Arguably, maybe even more productive than me. Differently productive. Like I could sit here for 8 hours and write documents, legal documents, but she'll literally get up there and do sheetrock. And like that's cool. I'll do sheetrock too, but I'd rather write the legal documents. So we all have our own interests. That's a very good left field question, Immutable. And it's meaningful. Very important things that most people don't ask, and I'm happy to give my opinion on it. Lasker, hey Noah, can you explain to me how you see it when stablecoins is rising in optimism, but TVL is falling? Yeah, because TVL means shit. Don't look at TVL. TVL is valuation. Valuation is pure bubble. All that matters is the amount of dollars. So if you want a common denominator perspective on markets and how much capital could potentially flow and how much potential there is in a particular market, look at the amount of stable coins there are. TVL is the most worthless inspection. It is nothing to me. TVL is dead to me. Stables. Look at the stables. That's all that matters. So I like this chart. And you can look on Deck Screener, look at USDT and USDC and whatnot. But look, this is where we are. The market hasn't started yet. Everyone's like, the bull market's almost over. The bull market hasn't even started yet. Haven't even broken out. Looking at the price of Bitcoin. No, I want to know dollars. It hasn't even broken out yet. That's the bottom line. Well, there's SD curve stuff on Polygon, though. Yes, that is true, IW. Yeah, there's plenty of curve derivatives out there on other chains. What if the government agencies will remain without jobs taken by AI? That'd be nice, wouldn't it? I think they do a more predictable job, a more trustworthy job, a more consistent job, a more reasonable job, probably. And guess what? They'll do it for cheaper. These politicians cost a frickin' fortune. enough to have a $1.8 trillion budget deficit. Hope that helps. Lord of the Pine Cones, always a pleasure. Talking about AI, 40% of American men driving for a living. Those jobs will all be gone. Gone, gone, gone. Bear in mind, a generation, those human beings will also be gone as well, for that matter. So that brings up very interesting long-term time horizon questions for our grandkids, for our children. So like 80-year-olds. If you think about 80-year-olds, that's a large percent of the population. In 20 years, they're all gone. All of them. How old will you be? I know I'll be 60, so I got plenty of life to live, and my kids will be literally still babies in their 20s. So that is when you really zoom out and you think about the structure of society, things get weird. Demographics is very interesting. Al, the ecosystem mentioned, most certainly Aladdin Dow, feeling Cleaver. That's a big deal. Cleaver has so much goddamn governance control. But that's really that whole conversation I had the other day about VLCDX, and I want the cash flow, which means curve, and that was my choice. So governance, I chose cash flow over governance cash. Anyhow. Layer 0 theory could we see VECRV wrappers on layer 2 in the future? Why not? Of course. Absolutely. Nicely observed. Lake Meadows, peace. No, I'm late for class, but eager to learn. Let's go. You have a good one, my friend. Let him know. Noah, let him know is status quo. Red Pill Daily. Doctor's orders. Yeah, that's right. Red Pill. We ain't blue pill in here. Gotta wake the fuck up. Gotta do it a little bit better. And 313 people made it to the end of the stream trying to do a little bit better. May God bless you guys. Thank you, guys and gals, for joining me. And as always, it's fun to chit chat with you guys and talk about what the hell is happening in this world, be it crypto. And we digress a fair amount, but uh, you know, I'm sure we'll all have a lot of stories to tell, and I'll see a lot of commentary in the coming year as the market finally starts to get hot. We'll have that kind of market to talk about, which is always fun. Monday, August 12th at 1:43 p.m. Thank you all for joining me until the end of the stream. Tell everyone to subscribe, and I'll see you guys and gals later this week. Peace.